Awesome. Well, welcome to the webinar. This is Daryl Martin with ApexInvesting.com doing another series on Be the Sniper or Be the Target. It's your choice. You got to make it today. And we had a great day in the trading room. Had a lot of people hit their 3 for 3, and even better is we had a wild market section and a good morning market and sort of a slow market this evening. But overall things have been really, really well, and we've just continued our success. If you haven't joined us, make sure you do join us at apexinvesting.com/bootcamp to get free access to our trade room, get access to our tools, and access to our training free for 30 days. So as always, we've got to throw the disclosures up there. There's risk involved in investing. Make sure you know what you're doing before you do it, etc. Okay? So what are we covering tonight? We're going to talk about mastering the highways and more on the sniper chart. And really, this is just about helping you understand what is on the chart. So some of y'all have been with us for a long time. You understand it. And just a refresher is helpful. Some of you are brand new. And you've just been like trying to keep up. So who is that? Like that's been trying to keep up and doesn't really know what a lot of the pieces are on the chart. Is there anybody out there? Okay, so we got a few of y'all that are brand new. And may even have some sticking around that don't quite understand where the pieces come together. So, I want to help you, go through that. And so that's what we're going to go through that tonight and Thursday night. Tonight, we're going to talk about everything that's not order prints related. And then I'm going to build a chart from the ground up. Okay? And we're going to go through on that. And then on Thursday, we're going to we're going to check with into the. I'm sorry, I got some people saying the no sound, and I'm going to reply to them that it is working. And on Thursday, we're going to dive into order prints and go into that into more detail. Okay, so if you don't have that webinar, if you haven't registered for it already, because I'm going to go into a lot more details in order prints than we have previously. So let me send you that link. Give me 1 second. I'll copy the link address. I think if I drop it in here, everybody will get it. There we go. Okay. So if you haven't registered, I suggest you register for that right now because we're going to dive into order prints. We're going to dive into clusters. And we're going to dive into trapped orders. We're going to dive into how to see trapped orders if you don't know before they even happen. Or how they disappear and come back. We're going to dive into mini magnet levels. We're going to dive into zones of interest. We're going to dive into paw prints. We're going to dive into the stars. We're going to dive into the volume score. So all those different pieces are what's coming up. So if you want to know more about those pieces and how they all come together to help you, then you'll definitely want to be on that webinar and it'll make you a lot more comfortable with the chart. Okay? Reminder, this is, these pieces help you take it to a whole different level. We got the Apex Live event coming up. We'll be doing, more webinars after the live event as well. So, but let's just go ahead and get started. And like I said, I want to start with just a fresh, clean chart. Okay? So the first thing on our chart is I'm going to go over here. And actually, I wonder if I can remove all my levels. Let's see here. Hold on. So that way I can really clear it, make it truly a clean chart. Hold on. We're going to go to drawings. And we're going to go to remove all my horizontal lines. Yes, all that work is now gone. Okay. So, the first thing that we do every morning, okay, is we should actually start out looking at what? What are the 3 charts we should look at in the morning? Who can tell me what the 3 charts are? Because I'm going to pull them up here in a second, but I want to see if y'all know what they are. Got magnet levels, 60 and 240. There you go. So our 10-minute, our 60, and our 240 charts. So first, let's just go over those and what they are. Okay? And so you should know if you, by the way, if you go to section, step 7, video, I want to say it's video 3, it tells you how to build the charts up. Okay? And so what we do on this is we load up a 240-minute chart, and we load, actually you can load up to 90 days back. So I'm going to apply that. I'm going to have 90 days back. Okay, so load 90 days back, not just 60. Okay? So we did 60, but as the market changed, it went into all new highs. Need to go back and do 90. Okay? And then we click on this horizontal line, and I'm just going to draw one in the middle here. But I'm going to change the color, and you can change it to whatever you want to. But, I make mine, usually like a dark blue. But you can make yours whatever color you want to. And I make it like 3 thick, and then I say apply it to all of my charts. And what these are is these are dynamic dynamic pivot levels. Okay? And by the way, when I click on that, I can also say set the default. So every time I draw one, it'll draw one for me without having to reformat it. And so these are like basically hardcore long-term support and resistance levels. And they can update on a daily basis. I thought I set that to default. Let's go back and do that one more time. So if I click on here and then click set default, apply. Okay. All right. And so what I do is I put them in, if there's 2 levels stacked on top of each other, I'm going to plot it there. Like I said, we're going to build this up piece by piece so you really understand the chart and where everything is coming from. So, okay. And then one more. And basically this is saying these are areas where the market's showing definite support or resistance. They're usually going to be areas where you may chop around. So there are areas you're going to be, careful on, and there are areas that will be attracted to the next level because they're, it pulled up and where to come right back down to this level. Pulled up, came back down to this level. Pulled up, came down to this level, and then actually one more point. But all the way up, stopped, came back up there, and then came back up, and where to do it? Came back and oscillated right around this level. Do y'all see that? Like, do you see how simple that is? Okay, so that's on the 240-minute chart. And you should, every morning, now you don't have to look at this all day. You shouldn't. You should open it or every night, whatever time of day it is that you trade, okay? Before you trade, this is the first thing that you do on your charts. So now I got to find where my 60-minute one is hiding. There it is. And then I draw my levels on that. And what I actually usually do is I put these either, split the screen with them, or so that way I can sort of know where I'm drawing, because sometimes it feels like a blank line, and I'll see what I mean in a second. You're like, where is that line even coming from? So there we go. Okay. So I think I should do 2 right there. What I'll do is I'll hit the Windows key on my keyboard, and I just hit left. And then I'll click over on this one, I'll hit the Windows key, and I'll hit right. And it sort of lets me, because then I'll wonder, like, where did that line come from after I drew it? Right? So I can see that, okay, that's a level, like, if I move it, oh, I'm moving that level right there. So I know that I do want that level there. It's not an old one. Going forward, when I do it, I don't have to redraw the lines every day, by the way. Okay? I can just literally, if it moves up, I can move it up. I don't have to redraw it. So you shouldn't really have to redraw them. Now, if I see a level as being really strong, like I'm seeing like it's bouncing off of it still, historically, I may leave that level there and draw an additional line. Okay? So here, let me try something real quick. There you go. Maybe that helps out for a couple of people. Richard and Eric, are you able to see the screen now? There you go. Okay. So exactly, you don't have to worry about how they move during the day. You literally just draw them first thing, and you're done with them. And then there's one other chart I draw on, so I shrink that down. Go over here and figure out where my 10-minute chart is hiding. Okay, this 10-minute chart, but where's my other 10-minute chart? There it is. Well, I can do it on this one. So on this chart right here, what I do is I go in and I load the Sniper 10-minute diagnostic magnets. Okay? I do a few trades if you haven't noticed. By the way, you can turn off all your trades by clicking Do Not Plot and hitting Apply on that chart, and they'll go away. Okay? Did y'all see how I did that? I went to Data Series, went to the very bottom, and changed that to Do Not Plot. So I never close my 60, 40, or 10-minute chart. I just shrink them. So when you draw them, they're not going to move on all the other markets. Okay? And you don't need to worry about what they do all day on all the other markets. So just draw them, shrink them, keep your workspace. After you've done everything, we need to make sure, by the way, that we do save our workspace. Okay? So and if you don't remember how to do that, you just go to the control center over here. Let me see. You hit File, Workspace, and then Save Workspace. Okay? Now, I draw on this one too, but I use a different one so I can know what it is. All right? So I'm going to click on that, and I make these orange. If you want a different color, you're welcome to. It sort of does help if you do the same thing as everybody else, because then people know what they are looking at when they look at your charts to help you out. And then I draw these levels. And it's sort of funny. First thing this morning, like I actually typed this to Lori. I'll show you this here in a second. This is interesting too. See how we see a flux and a dynamic at the same level? Right there. So we have the flux level and a dynamic at the same point. But this morning I was like, wow, we have 0 dynamic levels. And like the market was, way up here. I'm like, it's falling back down. I was like, it didn't lay a single high volume level up here. And later in the day, it did lay one. And that sort of became a swing area, as you can see, and became a support resistance area. But there was nothing above. Like it made that massive move up, and there was like no large amount of volume. And what this is doing is this measuring, okay, the top few percent in volume. So like literally like the third deviation, meaning like 0.5% of high volume bars. And 10-minute bars are actually used by institutional traders. And that's why I do it on 10-minute bars. There's a reason for that, okay? And then once I do that, I'm pretty much done with it for the day. Every once in a while, I may check the 10-minute one to see if something new came up. But when I saw that there was absolutely no, like, as of this morning when we opened over here, like right here, I was like, wow, this is before the market opened. I'm like, the market's going to crash back down because we have absolutely no volume, like no high volume nodes. There was absolutely no commitment up here in the market. And it pulled right back. So, and you'll notice, what did it pull back to? When it made its final big pullback, it pulled right back to another dynamic magnet. Okay, so they're magnetic levels. Okay, now if I'm in the room and I refer to a magnet level, I mean a mini magnet. Okay, because we say the word mini magnet a lot more often. Okay, and then if I mean dynamic, I'll actually say the word dynamic. All right, just to get some verbiage out of the way. I know it drives Marion nuts, but I'm like, I'm not going to say mini magnet because I say magnet like 1,000 times a day. So my personal preference on candlesticks versus bars, I actually prefer, I do candles because so many people prefer candles, but I was taught and trained to use open, high, low, closed bars and actually take color off of them. Because you get rid of all of the emotion and it actually makes you pay attention and read the bar. So, and then your dynamic magnets, if they're not already inside the template, make sure you go over here and you can set it to high or super high. If you're not getting any level, set it to super high. So if I set it to super high, then it's going to like really, it could drop them off or could not. Yeah, it's a smaller difference. So you can use high or super high. I go to super high when I like have too many. So there's not enough. We're at new highs. I'm going to go down to high. Does that make sense? Does that make sense? Like if we're at new highs and there's really no levels, but if we start going down, there's going to definitely be some more levels. So that's why I have it on high right now. Okay? All right. So far, does everybody understand? Like that's a process you go through every morning. It doesn't take more than a few minutes. I mean, and not even that. But notice how I'm shrinking and not closing my chart. I don't want to rebuild that chart every day. Okay? So I'm shrinking it, I'm not closing it. And then again, when I'm done with that, then I'll go over and I'll go to my workspace right here and I'll save my workspace. Okay? So right there, save workspace. All right? And then when I'm done, if I'm rebooting my computer like on the weekend or between 5 and 6 p.m., I'll close my workspace. And then when I open it back up, I'll open it. And I always have like either easy open or blank or untitled, like something with nothing on it because I want it to boot up fast. So now that we've done that part, let's go through and let's make a really basic chart, okay? So I'm going to go down here to NQ, and I'm going to choose diagnostic bars. We're going to talk about the bars. I'm going to load 10 days. I'm not even going to put a template on it. Okay? Oh, and it wants me to change my data series. So we're going to try that. It better not give me trouble. There we go. Okay. So by the way, if you get that message, you go to data series and change it to default 24/7. I had it set in there, but I reset a bunch of stuff on my Ninja, so check out that chart. Just backing up for a second. Look at that. Do y'all really see a picture now that you didn't see before on the 10-minute charts with those magnet levels? Yeah, it's naked, isn't it? But I mean, do y'all see like it literally hitting it, coming back, hitting it, coming down here? I mean, like, that's pretty cool, isn't it? I go back. Now it's just swinging around that level right there over and over and over again. And it's easy when you have all the stuff on the chart that it looks like the matrix and you can't see anything. But it's sort of interesting when you build it from scratch like this to go back and go, wow, that has a lot more power than I even realized. Because before I felt like it was just another line in my way. Anybody ever felt like that? Like, oh, there's all these dang lines. Right? But you look at this and you're like, wow, that actually does mean something. So does that help you out a little bit? I mean, you even see here, it didn't go to the dynamic, but it went right to the zone level. And what did it do? So if you got a long X box right here, I'm not saying you did, but let's say you did, would you be a little more cautious about taking it right into it? Yeah, The name of the orange lines are dynamic magnets. That's the ones we make from the 10-minute chart. Okay? So now, speaking of lines, I'm going to add some more lines on here. We're going to go to deviation levels. Okay? And I don't like having big zones around my deviation levels. So you can turn off the zones. I think that's how we have it on the template. If you put zones, then it puts like this highlighted area around it, and it's just one more thing to color up the chart. And then hit Okay. And now that will plot all of them on there. And you can see, 0.5. And if we back up on this chart, then we can really see, look at that, 0.5, came down, oscillated to 0.25, went to the 0.5, went back up to settlement, came back down to 0.25, up to settlement, back down to 0.25, down to 0.5, up to settlement, oscillated around, up to settlement, back down to 0.25, up to settlement, down to 0.25, down to 0.5, up, came on back down to 0.25. Do you think those levels actually have a little power to them? Keith, I just added the indicator deviation levels to my chart. Okay. And Craig's the one that really discovered the 0.25 having a lot of impact. And if I scroll on back, I can see like where, it's constantly they hit and they bounce off those levels. They become support resistance when they take off, they go to the next level, and then they oscillate. And I'll see, this is what I see happen a lot on the deviations, is you'll see oscillations off of them. So they come, they oscillate around, bounces up, comes back down, oscillates down, oscillates up, oscillates down to the next one. And often, you'll be surprised, especially on some markets like ES and stuff like that, but even on NQ, a lot of times it'll be to the tick. But do you see now the value those lines have? They're actually not just lines on your chart getting in your way. Okay? The lines on this chart are the deviation levels, Keith. You've been around a long time. You know what the deviation levels are. The deviation levels. None of this is order flow. Everything we're talking about tonight is everything but order flow that's on the chart. Yep, the dark blue is the the dark blue, that's the 6240 flux. I covered that at the beginning of the webinar. Can't go backwards. But I am recording it. Okay, so now we make them a little easier to see on your chart. This is what you're used to seeing. So Lori makes them like this lighter blue right here. Okay? So, and you can even change the colors of those. All right, so what is another level that we plot? Who can tell me, we have 2 other levels that we plot. What are they? We got ice, okay? All right, so a good question this came up, actually. Let me go back on 2 things. Okay, one, diagnostic bars. What are diagnostic bars? Well, if you look around, there's bars that look similar called like Renkos and stuff like that, and Unirenkos and everything else. The difference in our bars, and you'll notice it by how long it can take to load the chart, is that we have an engine behind our bars that pulls every single tick and makes sure that it's in order, and then makes sure that it processes the same each time. And it also has a session reset to make sure that the bars are constantly plotting correctly. So they're not just like a flat, easy, up and down Renko bar. There's more to them to make sure they're very, very accurate. Okay? So, and what they do is they basically measure 10 ticks from the open to the close, or 5 ticks from close to close. If this close to this close, it's 10 ticks. Okay? Does that make sense? So, 5 ticks, 2 bars would be 10 ticks. And one of the reasons I developed these is, one, I wanted more accurate bars, because I found Renkos and I fell in love, and I figured out they were fake because they had inaccurate information. And so I was like, well, I want accurate bars. And there's other attempts at it, but I had never seen anything that was actually completely accurate. And because I go through and I do literally like millisecond tests to make sure every single tick is where it should be. And our programmer he's even more, you could call it anal about it than I am. But I wanted very accurate bars. And it never made sense to me why we have a new bar just because the Earth has rotated a few degrees. I mean, think about it. That's what a time-based bar is, isn't it? Like, I'm going to trade based on a bar based on the Earth moved a few degrees, because that's how we measure time, is the Earth moving a few degrees, right? As it turns and rotates around the sun, that's the measurement of time. The definition of time is matter in motion. Why would you have a new bar on your chart because the Earth has moved? Does that make sense? I mean, just if you logically think about it, does it make sense to you? Like anybody else out there. Does that make sense? Like, there's no reason for a new bar just because the Earth moved a few degrees. But the market moved X number of ticks. That makes sense. I want to see movement because I'm trading at movement. That's what I care about. I don't care about time. I care about movement. Right? So that's why we use these type of bars. Okay? Let's see here if there's any questions. A second. Lori got that. Okay. So, one of the other levels we have is called ice. Let's see here. And I always have a hard time. I want to say version 3. Is that what we're using? Remember, I have all sorts of different stuff where we're always testing new things. So I want to make sure I'm loading the same thing. Version 2. Okay. Like I have like multiple versions of multiple things where I test stuff out and I throw it away and all that. So let's go down to ice. Let's add that on. Okay, now what is ice? I'm going to tell you right now, ice is not something I invented, okay? It's the name I gave it because we do it a little bit different. And it was sort of a joke that came out of it. It's like I can enter, I can exit. And that's where ice came from. But they're like ice levels. They're wall levels. And they come from... Does anybody know what they come from? What ice levels are? I mean, some of y'all should know. Y'all been around a while. They come from volume. That's true. And what's the original idea? Because, I mean, I'm all about making sure y'all know that what I do that is like dynamic magnets, original idea. I learned a way to apply it. I learned the idea of high volume on 10-minute bars from Tommy O'Brien. Diagnostic bars, I didn't invent the idea. I just made sure that I improved on it to make sure they were accurate. Deviation levels, I learned them from my mentor who is a floor trader who used them to gamma scalp, but he didn't use them like we use them. I was actually the first person to ever plot deviation levels on a chart. So if you see people plotting deviation levels on a chart, especially if they say they're implied volatility based, they learned it from me. And I know that sounds a little arrogant, but I've been doing it for over 9 years. And if you give me their name, I bet you they're in our database. Okay? Or they learned it from somebody in our database. One of the two. So where does ice come from? Ice comes from something called volume profile. Okay? And so I took the idea of volume profile and I was like, this is actually pretty cool because I'm big on a deviation. What's a deviation? Deviation is an expected move. Deviation levels, okay, are based on implied volatility, which is a fancy word for expected movement. And instead of being historical deviation levels, they're actually forward-looking deviation levels. Okay? How are they forward-looking? What I do is I take all of the readings of multiple options and I calculate what's called IV out of the option. And what it is option, which is insurance, okay? And people insure people based on how risky they are, right? Like you get charged more for a 17-year-old than you do for a 30-year-old. Well, options are insurance, okay? And so that insurance goes higher and lower based on how active they think the market's going to be, what the risk of how much they think it's going to swerve. And so it's people literally putting their money where their mouth is, what they're willing to pay for options based on the expected movement. It's the whole market telling you how far the market's going to move is what implied volatility is. And we take that implied volatility and we put it into a different deviation formula that then plots the implied deviation levels. Okay? Now, talking about deviation. What the ice levels are is they're 70% of the expected movement in a day. or not, sorry, not 70%. There's 70% of the volume from the previous day. That's what ICE is. Okay, that's what market profile is. Now, I've taken it and I've made it more accurate by plotting it based on the right time frame to plot it on, okay, for the close. I've also been the only person that's been able to make it actually apply to Forex. So we actually pull the futures volume to define where the volume is on the market. So you can actually take our ICE levels, our deviation levels, and you can put them on FX markets. We actually have them on 22,000 markets. Stocks as well. So if I look at this, I shrink it down a little bit, you're going to see there's a green line, a blue line, a red line, okay? Well, the green line is the upper area of where 70% of the volume took place, and the red line is the bottom. So between these two levels is where 70% of the volume from yesterday took place. The blue line is where the most volume from yesterday took place. And it's really interesting if you look at this. This was where most of the volume took place, and this is where the market settled. So it actually set most of the volume of the day happened at what became settlement. Okay? So do you think knowing that that's where most of the volume took place could actually be helpful? If we, again, back it up, shrink it down a little bit, and we can see, most of the volume from yesterday took place within this range right here. And it stayed right between that range. So it's an area you can also see it's stacking on top of it. And have y'all noticed that I've referenced the word stack? I mean, look at how many times where we have this dev level, we have this magnet level, and we have this ICE level. And look at how many times the market comes back to it, bounces off of it, bounces off of it, bounces off of it, bounces off of it. I mean, look at all of this chop right where all those stacks are coming together. So, and then somebody said similar to point of control from yesterday. That's actually what the blue line is. It's previous day's point of control. It's exactly what it is. So, not every idea is original, and that's okay. I think it's good to take ideas and build on them, as long as you give full credit, and it's a public concept. And these are a public concept. They're not a private, proprietary anything for anybody. So if it's a private concept where somebody made up the entire idea and built it, then of course you don't. You tell somebody to go there to get it, right? But I just like to be upfront with everybody. So do y'all like seeing that? I mean, just sort of backing up and just seeing these levels and the power that they have? Especially when they stack up together. Makes the picture a little clearer without everything on it, right? Now we have one other type of level that we plot. Who knows what it is? You do have this chart up. This is called the sniper template. I'm just building it piece by piece. Walls. There we go. The NQ levels. There you go. Good job. So go to indicators. I'm going to scroll down and go to NQ walls. And Lori actually puts these in and she maintains them in the back office. And then they feed to your chart from our server. Okay. And look at that. See these little dotted lines that go all the way across? They can be different colors. Those are NQ walls, or Lori levels, as we used to call them. Because we used to have to manually plot them until we got our programmers to make it automatic, and we talked Lori into typing them into a spreadsheet and maintaining them. And when she updates the levels, they update either when you reboot Ninja, or they update every hour, or maybe even less than that, automatically on your chart for you. And you'll be in a trade, and you'll be like, oh, where's it going? And look at this. Like, it came right down to this wall, and it starts going up. And let's say you get a long here. Where do you think it's going next? It goes right up to that wall, and you can sort of see if we zoom in a little bit more. Like right down here, it goes right up to the wall, bounces down to it, comes right down to the wall again. Look at this right here. Down, back up to the wall, breaks it, back down to the wall, oscillates, back down to this wall. Wall. See how it's like really respecting the walls? And these are amazing. She actually taught how to do these at the all-in course. And she's going to teach it again at the live event that we're having here in March. So, but you can see these levels start to actually have some meaning, especially when you start applying things to them like our setups and our targets, right? And do you think this might be helpful if you were, if you don't see a level in the way and you get a short, like say up here, off settlement, and you want to target something? I mean, you got ice, you got a deviation level, you got a dynamic magnet, and you have the Lori level, which is where it stopped to at the tick. Do you think that might help you if you wanted to trail? If you started to actually look at these levels and see the levels. To know where there was a target so you could give a trade some room to breathe while it's getting there. Yeah. How do you think we pick out these levels? How do you think Lori has those one and dones that she does? So she'll do a trade and be done. She makes her entire, 3 trades in a single trade. How? She's like, well, I got a long. It's a great setup. It's got a, Xbox with a paw, with the, on top of a paw on my level. Where's it going to go next? It's going to go up to this wall. So I'm just going to take this for a nice little, what is that? 15-point ride. And then boom, she does. So the more you learn to see through all the mess and realize it's actually not a mess, it's something telling you something else, the better you're going to be at trading. So we go over and we look at, charts right here. And we find, just looking back at, let's just say today, and we'll find a trade, like right there. There's an Xbox with a magnet, coming off a dynamic magnet. Let's say you take that one short. Well, you have a wall right there that it's going to, okay? And then it keeps going down into a couple mini magnets, so under that wall, I'd tighten my stop up. Keeps going down, keeps going down, keeps going down, keeps going down. Where does it go? Where does it stop at? At a wall. And then it bounces up. And that right there was an Xbox trade that went down 30, let's see here. So 37, 47, 57, about 20 points. It's a 20-point move. What's 20 points times 20? That's a $400 move on a single contract. And that's learning just to see all these messy levels and actually see that they're not messy. They're very, very valuable for using as targets. And that's how Lori calls where it's going to as she looks at those walls and those levels. Okay, are y'all starting to see the value here? These aren't just lines for line's sake. They actually have reasons behind them. And she has a very good reason for how she plots those. So they're very specific criteria. And again, like I said, anybody who was at All In last year, you have the ability to access that. Anybody who's going to be there, this coming March, you'll learn how to do it too for any single market you want. And she uses different colors to sort of denote different things for her. But there's strength differences for her. And if you ever asked her, I'm sure she would tell you what her... I think she has a... What do you call it? A thing that tells you what everything means. A legend. So she would tell you what the colors are for each thing. All you have to do is ask her. So... Now we have one other wall. It's not really a wall that we have on the chart that can confuse some people as thinking that it's a wall. And we use it on another chart to make a level. We use it on this chart also, but we actually don't use it to consider it as a level. What is it? What other thing that we put on here that constantly moves around that's not order prints based? Dynamic flux levels, exactly. So I'm going to put those on, okay? All right, so we got our dynamic. And by the way, do y'all, y'all realize you were able to trade all this without having all this knowledge, right? Do y'all realize that? Without having to learn all this, you were able to trade it. You didn't have to know what all these things meant. You didn't have to know what everything was under the hood, did you? And that was on purpose, because I've noticed people get so caught up in all the little details that they can't make any decisions at all. But at the same time, I wanted to progress you. So if you're brand new, this is, can feel overwhelming. Don't let it overwhelm you. You don't need this to know how to trade the system, okay? You need this to go to another level of trading the system, all right, to be able to take like 10 and 20 point moves, all right? So let's add these dynamic flux levels. Where are they at? Dynamic pivots. Dynamic. Not the threshold. What I had them labeled as, Lori? You'd think I would know. Flux pivot levels. Yeah, okay, that'd be simple. Yeah, somebody's calling. And it's a telemarketer, of course. Okay, so flux pivot levels. And they serve a different purpose on this chart. And if you don't like it, you can take them off. Okay? They're going to move. They're flux. They're in flux. Okay? They're looking at support resistance levels. They actually serve one purpose. If you've been around for a while, you've probably heard me say this a number of times. What is the purpose of the flux levels on the chart? Are they to be another level, another line, something to expect it to bounce off of, or what are they? Because they're not real strong on a dynamic chart. They make you look left. Exactly. So, what do I mean by look left? Look left and see what there is. Are there magnets? Are there poles? Are there clusters? Okay? Are there things on OP that matter? That's all the flux levels are there for, is to remind you to look left. Because it's so easy for us to not look left. So it's coming up to this area that has been like a minor support resistance level. What's left that I need to look left and pay attention to? Okay? That's why they're there. They are not to be meant as another level to expect something to bounce off of, unless you see something on the left that says there is something to look at. Does that make sense to everybody? They're there. They're a highlighter. That's all they are. So don't give them more power than that. They are on the diagnostic chart. Don't give them more power than a highlighter that says, hey, look left. Okay? Good there? Let's see here. Okay, we got two other things on our chart that are not based on order prints. What are they? Actually, we have three other things on our chart that are not based on order prints. Four other things on our chart. There we go. Yeah, we're doing so good. 5 things. 6 things. Institutional blocks are based on order prints. I-zones are based on order prints. Gaps are part of NQ walls. Mini magnets are based on order prints. So I'm talking about stuff that's not based on order prints. And this is a big thing. I want you to get, this is all stuff not based on order prints. Okay, so one thing that we have, pretty simple, it's just called the current price indicator. All right, there's nothing real special about it. It plots the current price. So it draws a level where the market is currently trading. So it helps you see that. Okay? Y'all see that right there? It's just the current price. But it's helpful to, again, what does it help you do by having this big line? What does it help you do? It helps you look left. Okay? And it's easier than looking at a little box on the right side of the chart. Okay, another indicator that we have on here is we have the bar range version 2 indicator. And that offset of 1 means where will it make a new bar? Okay, so 1 tick beyond that will be a new bar. And you can add that and hit apply. And then you get the range. If it hits this price, it'll make a new bar. If it hits this price, it'll make a new bar. Okay? Making sense so far? Now, did you know that, how would you like to know where the take profit, the 10 ticks away from the bar, is going to be right out of the gate? Did you know you could add it twice and make it 10? And you could even change the color up. And that's going to be your profit target. So we come up with some other color over here. Trying to make this thing smaller. There we go. Hit apply. Well, it should add it. All right, let me add it again. Here we go. Bar range version 2. Here we go. So literally this could be like your entry and your take profit price automatically calculated for you. And that it will be 10 ticks from the high of the close of this bar. Remember, what is our rule? 10 ticks from the high of the close. And it's not, that indicator knows what the high of this bar is going to be. Now, understand, when the new bar happens, it's going to move. Okay? It's going to move. So you need to be aware of, like, okay, 90.41.50 is going to be my take profit. You need to make that note before you get in. Okay? And then you can just drag it and move it right to that price. And if you wanted to, go, well, I want one for after I get in, because maybe that's more important. What if you just changed it to 5? Now, this sounds weird, but if I changed it to 5, if I got in on this bar right here, then it'll tell me what 10 ticks above will be. If I got in right here, it's going to keep it right there, and I'll know exactly what my take profit is when the next bar gets triggered. So when this bar gets triggered, 5 ticks higher is right there. And another really helpful thing of adding on, and definitely change the color so you know what you're looking at. Okay, am I looking at 10 ticks away, 5 ticks away, or my entry? Okay, so you can change the colors to be whatever you want. But any of y'all had trouble seeing obstructions before? Like you didn't think about them? Do you think maybe having this thing, like having this one on here that has 10 ticks, and again, make them different colors or you're not going to know what you're looking at, okay? I'm not going to spend the time doing it right now. I mean, y'all can make it different colors, right? Y'all got that down? Like you just change the color? But if you have this 10 tick one on, well, if there's something in the way of 90.41.50, then there's my obstruction, and it's right in front of my face. And you'll know exactly if there's an obstruction in your way. And then once the bar closes, if you have the 5-tick one on there, you can tighten it right in to be on there. What do y'all think about that? Is that a good aha moment for everybody? So, but again, definitely change your colors, okay? And I want to say, yeah, it's not really impacting the visual with the displacement. I was hoping it would. But, I mean, you can even say, you know, don't put the diamonds on there. You can say don't put the text on there. Like, you could literally say false on the text. And then, you know, all you're going to get is the little diamond. It may be harder to see, but there's different ways you can play with this. So you can play with this, and you can make it what's easiest for you to see. But now that you know the rules, you can do that. Now you can also go over here. Yeah, this is what I was looking for. Is if you wanted to move one over, like maybe the take profit, the big take profit went over, you could move that over in the pixels. See how we did that right there? So that's my take profit, okay? And I could even move it a little bit more over. Like, well, that'll be my take profit before I get in. And this will be my take profit after I get in. And this will be my entry. So now I've sort of spaced them out to make it easier to see. If you want to change your print size, you got to change it for your entire chart under chart properties. So like you're saying, hey, I need to make the print larger. You can go in here to properties. And then one of these settings, let's see here. Ooh, where is it? Yeah, right there. Label. Okay. I think if we change this, that makes all of my print larger. There you go. So the label under the chart trader properties. So that's where my take profit's gonna be. Is there an obstruction in the way? Now that I'm in, I need to move my take profit to that level right there. No more math, automatic, right in front of you. And again, y'all can change the colors around, or you can just offset them. I mean, offsetting also helps out quite a bit. So I bet this was probably one of the biggest aha moments. Who thought that bar range would be the exciting part of the webinar, right? Okay, so the next thing we have is the oscillation detector that's on the screen, right? Let's see. Oscillation. Now I gotta see what version I have. Pretty sure it's the original. Just want to make sure that I'm using the same one that we're using. Yep, it's the original. Original has always been the best one. Okay. So oscillation detector, scrolling down. And of course, we changed the colors to make them a little more readable than what you're seeing on here. But this is measuring the volume in a trend. Okay, so the market ran up, ran down, ran up, ran down, ran up. And it's literally just measuring the volume in a trend. And when it matters is when it's actually in a trend. Okay? Not when it's ranging. When it's range bound, could care less what it says. Okay, I don't use it for divergence or anything when it's range bound like this. Okay, I look at for it when it's actually been running and then it gets weaker. Like here we're running and then we have this little hill and it's trying to run up higher and it gets weaker. So notice a higher high and it get a lower number, 18,000 versus 2,700. Do you think that means we're tired? Because remember, it doesn't matter if it's a long bar or just a few bars. I mean, there could be a crap load of volume in one bar, and there could be no volume in 10 bars. So yeah, that's another good point that Richard brings up, is using it to adding on 3 of them is very helpful in fast markets because you don't have to do any math. The levels are right there for you. So like, if y'all watched the Dom webinar last week, that was really helpful and insightful, right? Well, let's say the market's moving. So Stephanie says, I'm not sure, I don't understand. I'm not trying to call you out, by the way. Market's moving fast and you have to add 2.5 points so you get in and get out at the right area, right? So we have all 3 of these. We have the entry, we have the 10 ticks, we have the 5 ticks. By doing that, it's like instantly you know, okay, this is where my take profit should be so I can move it quickly. So somebody says, shouldn't it be set to 6 and 11, not 5 and 10? No, because the take profit is from the high of the entry bar. The take profit is not from your fill price. Your fill price can be better, can be worse. Okay? Depending upon what your slippage is, you can get better. Like you could pop up, hit it, and pull back down, and you can get 5 ticks better. Or, you can get worse. So you measure your take profit as 10 ticks from the high of the bar, not 10 ticks from your entry. And so this helps you make sure you keep that math correctly at 10 ticks from your entry. Does that make sense, Mark? And that's one of the most important things that you need to understand is it's 10 ticks from the high of the bar on a long, 10 ticks from the low of the bar on a short. And I tell you, like I've seen, like we already had a trade, this was a couple weeks ago, but where it went to 10 ticks to the tick, and I mean a Trump tweet came out 5 seconds later before it made that 11th tick, which would have been like 10 ticks from most people's entries in that point. And it skyrocketed the other direction. Everybody who had their order in took profit. Everybody else got slammed. And I've seen that happen a number of times where people have had a winning trade that moved the 10 ticks, but they didn't adjust their take profit, and they ended up having a 20 tick losing trade because of one stupid tick. And this will help you with that math of not having to deal with it. Corey's like, yep, I've been there. So I've been there too, Corey. That's why I know these tips. So yes, you'd enter short at 90, 32, 50. That would be correct. So yeah, one person's bringing up, especially if you add in these pixels and stuff, you may have to go into your properties. I can see, watch this. If I click over here and I go to end of chart, like I can't see everything. So I can go to properties and I can go down here to my right side margin and I can make it bigger. And now I can see it without any problem. So if you went short at 90.31.25, your take profit would be 90.29. So I think what you're missing, Mark, is the second level is what the take profit will be after you've already got in the trade. Not before. Before I get in the trade at 90.31.25, I'm going to get out at that third level. But if I've already got in the trade, that second level will become my take profit, which will be 10 ticks from the low of the bar. So like if I got in and I got filled right here, then this level would actually, all these would move down. And so you still have it there, because otherwise, unless you remember that 90.29 is your take profit, then you're sort of stuck, like doing math. But if this gets filled and all these numbers change, then what's going to happen is my second number is going to be 90.31, is going to move, but this number is going to become 90.29. The second number will become 90.29. If you just watch it on a chart, you'll see it. Okay? So I'm not saying the second level is your take profit. I'm saying it's your take profit after you've got in and you're on the entry bar already. So it's 5 ticks below that bar that you're already going to take profit. You're getting those 4 ticks and then another 5 after that. And there we go. See how it hit it? And look at that. My second level is now 90.29. You see that? It was my third level. Now it's my second level. So if I would have got in right there on that tick, now that's my take profit, 90.29. Is this helping? Like, is this a helpful webinar? I know it's basic, but I'm hoping it's, some stuff is resonating, some tips are being picked up. So if we ever worked on a discount entry after a reversal bar, we do that when there are clusters, Kevin. So we talk about the room a lot. We'll actually cover that on a webinar too. But when there are clusters on an entry, often we'll let it pull back to within a few ticks of a cluster and then get in. You risk not being able to get in the trade, but you make more and have less risk. Okay, so this is important. Stephanie wants me to highlight this. No matter what your fill is, your profit target is still 10 ticks below the low. Okay? So if you got a horrible fill because you weren't using a stop limit offset of like 1, and let's say you stop market, or you just jumped in the trade at the wrong time because you just, I want to get in, and it's already moved like an entire bar, it's not 10 ticks. Your take profit is not 10 ticks from your entry. Like, and this sounds really stupid, but I actually hope everybody will do it. Say, my take profit is not 10 ticks from my entry. My take profit is not 10 ticks from my entry. My take profit is 10 ticks from the high or from the low of the bar, no matter where I get in. There you go. And some people, they're like, a lot of times I always get like a 1 tick of slippage. So I want to change my ATM from 2010 to 29. And you can do that, and that's okay. But you may get a better entry. Often I do get a better entry. So I don't want to give up a tick all the time. But there's nothing wrong if you want to change your 2010 to 29 to help out on that. But that's only if you have your offset limit set to like a 1 tick, and 9 still may not be right because it moved 1 tick, and then if you got 1 tick of slippage, then 8 is what it should be for your take profit to get 10 from the low or 10 from the high, because you had 1 tick above that you said to get in, and you had 1 tick of offset. There you go. Now you're 2 ticks in, so even 9 is not working for you now. I set my offset to 1. So you can set it to 2, but I found that whatever I set it to is usually what I get filled at. If I had set it to 0, there are a lot of trades that won't get filled if they don't pull back. But you can also even set it to 0 if you want to. And then if you set it to 0, then 9 would actually work every time. But if you got a better fill, then you're giving up a tick. So that is correct, Corey. You need to adjust your take profit to always be 10 ticks from the high or 10 ticks from the low, which is what this whole thing about the second and third range is. Because it's telling you exactly where that value is. It makes it easier for you. So many people are going from 10 ticks from their entry, and they're up 8 ticks, and they're waiting for those last two, but they don't realize they're already 10 ticks from the high, and their winning trade turns into a losing trade. How many people have had that happen to them? So Damien actually, and I appreciate you being bold enough to say this. I hope you don't mind me calling you out on it, because I think it's a good lesson for everybody. He's like, I'm always doing market buy or sells, and I'm not following my take profit being 10 ticks from the high or low, and that explains why I'm losing so much. And it really does. So that's why I tell you in your chart trader properties to go over here, and where it says stop limit offset, and this is a brand new chart, either set it to 0 or 1 or 2. So I usually have mine set at 1. And when you go in and you put your orders in, do buy stop limit. Not buy stop, because that's a marker. That means fill me at whatever you want to fill me at. If you want to fill me 10 ticks higher, fill me at 10 ticks higher. I did it today, lost by 1 too many times. Learned that lesson last week. So is that an eye-opener for some of you? Is that helpful for some of you? Of like, oh, wow, I've been waiting for it to go too many ticks, and that's why I'm losing some of these trades that everybody else is winning on. It's like Daryl's like, oh, today rocked. And I'm like, I got my butt handed to me. Because you're doing market orders, and it's already moved its 10 ticks, and you're waiting for another 5. The 5 and 10 numbers are not on the chart in the room. The room is there. The charts on the room don't have everything on them. They're there simply as a backup. If you're trading just on, like if you're beginning, and you're looking at it, that's fine. But, set your charts up. Like, that's a backup for you. You need to be on your charts, trading on your charts. There's such a big advantage to doing it. Just use the chart rooms as a backup. Don't use those as your main charts. Richard is like, for weeks, I couldn't understand why you were saying winner, winner, chicken dinner, and I was only up $25. So JP's like, I learned a lot today, but I'm glad it was a lesson I learned in demo. So yes, those are experience is the cruelest teacher. It is not the best teacher. Wisdom is the best teacher. Yeah, you can get the charts immediately. From day one, you can get access to everything. So if you just go through the steps on Sniper, step 7 is going to teach you exactly how to set up all your charts. Step by step, all the way through it. And if you get stuck, let us know. We'll help you out. So, yeah, Damon's saying he was down a ton today because of doing market orders. And especially when it's flying. Like this afternoon when it started going crazy, whenever there was rockets that got launched from Iraq at U.S. targets. And there were also the whole thing about not going to do tariffs after the election, tweets, whatever. Went nuts. It was a bunch of great trades. But if you were trading market, you got your butt handed to you. Damien's like, a rocket was aimed at me. Okay, so y'all are picking this up, right? Like, this is helpful. This is like, you're like, I'm going to actually be able to improve. I'm going to be better tomorrow than I was today. You don't need the bid-ask buttons. No. You don't even need the buy-sell market buttons. You need, the only button you need to pay attention to is the close button, which is really big since I increased the size of the font. Close is a great button. Beyond that, you don't need any of the other buttons. Don't use anything but close. Should be trading off your DOM or off your chart, not off of this stuff right here. And you can take your DOM. I mean, if you want to like have your DOM like right on your chart, right click on it, say always on top. Go over here to your properties. Set this thing way off. Like go in here, we have it at 150. I'm going to make it like 350. Hit apply. That's not enough. Okay, I'm going to make it some more. 600. Hit apply. You can have your DOM right there between the price and your chart. Sitting on top. So if you want your DOM right there, there it is. So it's not going to line up exactly, but it's pretty helpful. You could probably play with the settings enough and get it to line up exactly if you wanted it to. But what the line is at 90, 60, 50, that is an NQ wall level right there. Yeah, so I mean, if you just set your offset and put it there, then you get to stare at your chart and trade. So there's a simple way for you to not have to look all over the place or take up more screen space. Yeah, and you can close your chart trader out and give yourself even more room. Okay? There might be a way to change it, but all I know is the middle mouse wheel is the only way to initiate a stop order. There may be, I think there's another way to do it. I was helping one of our customers who has some challenges, and I think he figured out a way to do it. And I asked him to post it in the forum. So check the forum for a new post, and there might be a post in there about how to change what button does that. Okay? But yeah, so stop limit, gotta click that right there. But I mean, it's not hard. You just literally push down on your mouse wheel, like physically push your mouse wheel down. So the wall differences are strength levels. If you want to get a legend from Lori on exactly what the different colors mean, I wouldn't really worry about it too much if I were you. Like, let's put it this way, I don't worry about it. But if you want to know, just for sake of knowing what strength level they mean, ask Lori in the room for a legend. Okay? Yeah, you can go get literally, I think Lori said she bought a mouse the other day for like $4 or $14, and it had a middle mouse wheel you could push down. I mean, you don't need a wireless mouse. Actually, you should not be using a wireless mouse because Bluetooth impacts the ability for it to communicate, and your batteries can die. Not a good thing. Just have a plugged-in mouse. They cost less, and they work better. It's not cooler. It's a bad idea. So, question: what about the liquidity with all these traders taking these trades? You're looking at liquidity of a DOM, not liquidity of fills. Go and look at how much volume happens in the course of a day. Not an issue. I mean, right now there was 12,000 contracts traded, like in the last 10 ticks, or 504. Night 549. During the day, I mean, you'll see 12,000, 10,000, 20,000 contracts within a matter of just like 5 ticks. So we're not going to impact the liquidity no matter how big we get. As much as I'd like to think we're that huge, we're just not going to. I wonder if I can copy. Yeah, I can't copy it. I can't click on links inside of the chat. When you start trading 10,000 contracts, you need to be trading different markets. Be like, I'm going to be a billionaire in 2 days. And I'm going to lose it all in one. But, can I highlight what? What do you want me to highlight? Nope. Oh, I've seen it. I've seen literally a trader be down over $1 million on a single trade. It was not fun to watch. And they actually were back down to only, it went down $1 million against them. It came back. They were only down 3,000. I was sitting there in the office with them. And I'm like, close your freaking trades out. Like, they had 2 weeks of just ulcers going on. This was in 2008. Only 3,000 down. They're like, Rummel, and $3,000 more dollars, like, I'll be break even, I'll close it out. And I'm like, close down your trade. Guess what? He never made back the 3,000. He held it all the way back down. Lost 1.2 million. Yeah. Was not pretty. First loss is your best loss. Just take it. All right, so let's go to the deviation reversals. Okay? By request. Nah, he didn't cry. He just got up and kept going. He had more. That was like half his account. So we got the hills. Now, I have found I like a different setting that makes it a little easier for me to see. Okay? And that setting I like to do is I go over here and I turn off the auto bar width. So you see the before. And it can be sort of hard to tell if there's a big hill, little hill sometimes, right? Because they look so close together. What if we just turn that and change it? Can you see it now? Do y'all like that better? Is that a little easier to see? You can make it lime green if you want to, but just by changing that one setting, and I'll show you that setting again because I know some of you weren't paying attention. I just changed the auto bar width to true. Yeah, let me change it to in the correct setting there, 22. Thank you. Shrink this so I can do it on one screen. There we go. Appreciate that, Marion. Does that help you maybe see big hill a little easier? There's a big hill, there's a little hill. Right, so we got a lower price with a little hill. That is divergence. Do y'all see that? We go over here. The market's going up, pulls back, going up again. We got a big hill and a little hill with a higher price. That is divergence. Is that easier for y'all to see? And now it looks more like a hill instead of just a big histogram. Do y'all like that? And if you want to turn the yellow lines off, you can turn them off. I use them on there because I use them from other systems that we teach. So usually when you're getting to those points, you're getting to extremes and, expect a pullback. Because it's a deviation reversal. It's basically saying you're really stretching the dev. And you're probably coming up on a pullback. And you'll notice, like, when we get up to those levels, you get a pull back. You get there, you get a pull back. And there, you get a pull back. Right there, got a pull back. Got there again, what happened? It didn't happen right away, but it says, hey, one's coming. So when you get to those extremes on the dev, often there's a reversal coming. It may be a little reversal or it may be a big reversal, but the chances of it being big is when you got big hill, little hill on a new low. Now the new low needs to be a new low. Like it went down, new low, new low. Okay? 1833. Got to turn on my crosshair. 33 is a dev? What do you mean is a dev? You got it? Okay. All right. So it bounced off a dev. 0.5 deviation level. Okay, so do y'all understand that's what the deviation reversal is? It's literally the market's just like, it's like a rubber band and it's probably going to pop back. So that's just sort of letting you know, like it's different than overbought. It's using the deviation formula intraday instead of just on the day. All right, so that's easier. Now you got all this other stuff over here that we taught you. That's easier. You're starting to learn a little bit about the OD. Starting to see value in the levels. We got one more thing. I think we only have one more thing to add on. And that is the expected volume indicator. Hey, Lori, in Skype, check, I'm going to type you a message. So check your Skype, Lori. So what are we looking at? The yellow line is the expected volume for that second. Okay? Like it literally, we're going through and we're measuring, and this is a formula that I came up with of how much volume should you expect at that time. And it lets you know, hey, do you have more volume than expected? Is this just average normal volume or are you way below volume? Okay? So that lets you know the expectation. The blue or purple or whatever color that is the actual volume that's happening in that bar on each bar. Do y'all see that? Simple enough? Everybody following along so far? Y'all still there? Okay. Gotta make sure you're still there. All right, the two little black lines are like 25% or 75% and 125%. Okay? So are we 125% above volume or are we below 75%? When you start getting below 75%, it can be a lot more challenging to trade. Because it's like the big boys aren't there. When did we see below 75% a lot? Those that have been here for a little bit. When did we see that happen a lot? At like what time of the year? Yeah, around Christmas. So big boys weren't trading. Market wasn't moving much. Don't expect a lot of movement. Doesn't mean it can't move, but it's just not as predictable. Okay? If it gets too high, it can become almost insanely hard to trade. So, but, depends on your style. If you like, I like it when it's high. To me, the higher the better. But to Lori, she likes it when it's right, close to the white or the yellow line. Now we have a setting in here. Let's see here. Where is the new setting? If you have the new toolkit. Please tell me I have it. Where did I do? Where is that at? Hold on one second. I want to see if it's in here yet because we got a new thing we're working on. Bar width, visual alerts. think it's in there yet. So one of the things that we're looking at doing is making it where you could actually, if you, now here's, I want to tell you something first, before I go into this. Sorry. I like to notice when volume drops off. Okay, it's flying up, boom, drops off. I like to see the volume dropping off. So to me, it's not just about the percent. Okay? I'm actually watching the volume. Is it growing? And then it gets tired. It's like, well, it grew a lot on that up move, and then it actually sort of kept it going, and then just dropped off. Okay, there we go. That was the problem. And then, let's see here. But I want to show you another setting. Okay? And if you use this, I would suggest using both. And let me find it, like I said. Here we go. I'm on 05A. Hold on one second. So what we're going to do is we're going to add a setting where you could actually plot the percent that volume is at. So we're going to change it right here for a second. And we're going to display it as a percentage. And now, notice how expected volume is a flat line. Do y'all see that? Does everybody see like expected volume is like one flat line? Well, now the blue, instead of being the actual amount of volume, is the percentage of expected volume. So like we're at 600% of expected volume. Right now we're at 180% of expected volume. And so you can actually plot it as a percentage of the expected volume instead of the volume itself, if you want to. You can see where the market went nuts today, can't you? Boom. That's pretty revealing. So yeah, in the data box, it'll even show you like the actual number right there. You'll see expected volume and actual volume percentage. But that's a new feature that we put in. And you could have EV on there twice. You could have it once the normal way. Okay? So you can actually see volume. So go down here. And then once where you can see the percentage. Like that. And you can even change the color to help you know the difference. So again, all I did is I went to the expected volume indicator. And I went down to 03A setting 5. And chose display as a percentage. So the advantage would be, you know, like the triple dippers, like if you're below 75%, you can take it on the first tick of the bar. So when you get to setup 2, that would be an advantage. And some people just like to see the number in percentage. Now, I'm going to tell you right now, and I'm not saying it's a bad thing. We have people that use it and that love the setting. A lot of people didn't even know it existed. I don't use it. Okay? So I'm not saying you need to. but I'm letting you know what's there. Okay? But like I said, just trying to walk through each part of each indicator for you. And did I cover everything? I think that's everything we have that is not OP. Oh, we also have the divergences. Without getting into all the complexities, because they all have their own settings and everything else, but we got the divergence warning icons, and we got the early hidden divergence signal detectors. And basically have 3 settings, and what it's looking at is it's looking at three different things to find divergence and hidden divergence. And that's where those little balls for the triple dipper come from. They're based on divergences in the market. And then I offset them and put all these fancy settings inside of them to make them plot how they plot. So we have 3 different divergence settings. It's specific ones that we use. And we just hard code it into it. Instead of making it complex, we make it simple. You get an icon, you're set. We don't go into the patent, we just go into what's there. Do you always ignore the second and following triple dippers? I'm not sure what you mean by that. Absorption, and I'm not sure what you're asking. But there's 3 different divergences that go into the different ones. These indicators are not based on OP. Everything on this chart is not based on order prints. But I do make all 3. They have to be all 3 of them there if I'm going to take the trade. I don't do it if there's 2 of them or 1 of them. I also don't do it if there's multiple triple dippers in a row. I like them in range-bound markets or, maybe a pullback in a market. But I don't like it when there's 3, 4 triple dippers in a row. That just usually means the market's going to keep going. That's because divergence can continue to diverge. All right, well, that is the big summary. Hopefully just learning a few of those things. If y'all got 1 or 2 solid things out of that, then it was worth it for you. But I got a lot of wows, and that's great, and that's going to help me a lot. So that's the summary on the chart and everything that's not OP on it. So I will have this webinar up tomorrow after we're done trading. I'll post it up, okay? I'll post it in the Facebook group first. So make sure you join our Facebook group if you want to get first access. And make sure you register for Thursday's webinar because we're going to go over all the OP stuff in detail. Okay? Awesome. I'm glad y'all enjoyed it. Y'all have a fantastic evening. I will see you tomorrow morning in the room. All right, y'all have a great night. Thank you. Again, if you're watching this, check us out at apexinvesting.com.